Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. Today we're going to do our daily gold and silver technical analysis update. We're going to go through dollar, 10-year yield. We're going to go through some ETFs, the gold, silver, platinum price, and some individual companies. What we're looking for, and what I'm looking for, and what I'm going to propose tomorrow, I'll do another video here, is I'm going to show you how real estate, in an expansion phase of real estate, ties to oil. And remember, oil is the number one commodity that's used in basically everything. It's also energy. Energy is what underlies, it's basically the foundation of an economy. When you have inflation, the first thing it has to hit is oil. Then oil is going to seep through that inflation, the increased price of oil, is going to go all the way through and snake its way into higher prices of everything. Because everything's made with energy, everything's transported with energy, and oil is also the number one commodity, and it's used in plastics and all sorts of stuff. So what happens is you should see oil take off first if we're in an inflationary, well, you'll be in an expansionary phase first. You'll build more new homes, new loans against new homes. That's inflationary. It's expanding the M2 money supply. That inflation will find its way to oil. Oil will then find its way into all these products, and then those products will go up in price. And there's your CPI increase. And what I'm doing tomorrow in a video, if you guys are interested, look for the video. I'm going to show you the lag between housing starts, oil prices, and gold price. And I'm going to show you how it all links up, all the little movements and whatnot. And so basically, oil is just a precursor for the move of gold and silver. And man, when some of these get moving, I think we're going to see a massive move to the upside for all of the commodities. So put me as, okay, if there's a Super Bowl and then there's an Ultra Bowl. Well, I'm an Ultra Super Bowl. So how about that? I am very bullish on gold, silver, and platinum. We are early to this game. I'm going to go over all the delays and lag times and all that stuff in a coming video. But we can still look at the charts. We can still look at the short term and look for entry points. So let's dive in. This is just my financial opinion. Please don't use it as advice. I call this gold and silver. I'm going to look at the dollar and gold. The dollar was very low, and it came back on up, and it's gaining a little bit of steam here. I mean, obviously, we still had a down day, and opposite was gold. Looking at the dollar here, we have a bearish engulfing pattern. We were down today, but it ended a little bit lower. So what did it end at? 93.32. So we're up here, but it was still a down day. If I were to draw some trend lines in here, and let's back out a little bit. So I'm going to back out. I'm going to start drawing some trend lines in here. And I'm doing this. So one could say there's, and it depends how you draw these things. You could draw it like this, almost. You could draw one up here. You could draw one like this. What I've been doing is I've been drawing it like this. So we had one that came up through here. And then we had a squeezing up that broke to the downside, came up to back test, and I think we're going to roll over and come back down. That is a possibility. That's what I'm looking on the short term here. Looking at the 10-year, we're moving on up 3.55%. This shouldn't be a surprise to anyone on the channel. I've been expecting a move higher in interest rates. I've been dumbfounded how they've actually held this down for as long as they have. But structurally, underneath, in the real estate market, in an expansionary phase, we've always seen interest rates go higher. So I would suspect that interest rates are probably going to go higher here. Now, zooming back out, we have a bullish engulfing on the weekly candlestick. I think we're going to be heading higher. This is setting up for a very bullish move, which means higher rates. We can draw a line through this guy. We can draw a line through this guy. But if I draw it through here, I think we're going to try to break that line there and then move on up. Why do I think interest rates are going to go higher? Because interest rate or inflation, we have high rates of inflation. And what that does is it puts a real negative yield on bonds. Bonds, if they pay 1.5% interest rate and inflation's at 5 or 6%, you are losing money by holding bonds. And bondholders are going to sell their bonds. And the only person who's buying this stuff is the Federal Reserve to hold the rates down. They're going to end up having to buy absolutely everything, and I don't think they can hold it down. I just don't think they can with time. This money that has gone into the system is synthetic. Synthetic being that it came from the Federal Reserve. What is structural and real that is coming is going to come from the expansion phase of real estate and the new loans and credit expansion against those new loans in an expansionary phase of real estate, which means we're going to build more new homes with more new loans, which is going to expand the money supply and be inflationary. Every time we've seen that in history, it has been inflationary, and interest rates that we're staring at right now are going to go up. Looking at gold, we're still coming on down. This still looks bearish at the moment in the short term. We are still coming under pressure to the downside. I see very large sell-off candlesticks. I haven't seen that turn around yet. Looking at silver, we can throw in, and guys, I'm not afraid here. Like some people, they're afraid to see their accounts go down a little bit. I'm like an ultra bull, I guess. But we could still break down here. We could flush out some more weak hands, cabbage hands. I know a lot of people, even on the channel, are getting pretty. They're getting pretty down on it, down on gold and silver. That's the time where I start to get even more interested. We could break down here. We might head higher. I don't know which way this thing's going to go. We're going to have to watch and see. But I'd like to show you guys tomorrow what the links all are between real estate, oil, and precious metals. And then we've got platinum. This still looks really good. 2 big up days with the small little pullback of down days. I think the buyers are in control. This was just a little flush out of cabbage hands or whatever hands you want to say. But I think we're going to start turning around. And again, guys, I like playing the physical precious metals of platinum. I don't have hardly any money in the mining companies. I know a lot of people on the channel, they try to push, how can we get leverage? How can we push the mining companies? I mean, if someone says, what's the lowest risk way to stack $100 bills in your pocket? It's probably through physical metals. It's by far the lowest risk way. And I hit that button a lot. I just hit the low risk button. Here's GDX. We can throw some trend lines in, and I know we've been breaking some stuff here. We've got some support right there, which we're starting to break down. You can see that breaking down right there. Now, we also broke through this guy here to the downside. So we could see some more downside selling pressure. What I would do is not be afraid. I'd wait for this to bottom. And again, I want to show you guys this, how everything intertwines together. And we'll do that in another clip. GDX, looking at the short term, it is pulling back. It's coming under some pressure. I would just hold on. I'm not doing anything. So here's SILJ. SILJ's got a little bit of selling pressure. This is a weekly candlestick chart. Our support is somewhere in this region down here. Yeah, we're coming into support right now. We'll see if it holds. We might head lower. Here's SILJ zoomed in. What I am looking for is a contraction. And are we getting a contraction? I mean, I'm looking for it. Could be there. We came on down. I mean, looking for you guys to see what I like to see is a descending kind of triangle. We broke out, we came back. Is this thing going to head higher? We've got small little down candlesticks, which the sellers aren't coming in here and whomping this. To me, it looks like people are wanting to buy it. But yeah, that's what we have today. EXK, I mean, the sellers aren't coming in here and smashing it lower. It's low, but we've got big buying pressure here. We have a bullish engulfing here, but we kind of like deflated out. Very rarely do I see this type of trading action. I'm going to wait and see what happens. AG is looking good too. It looks good to me. It doesn't look bad. It looks like this is something you want to go long in that wants to go higher. Problem is, I don't see it in the silver price. And, I'm looking for a contraction here. Like, is there some sort of contraction that we're going to get here where this thing kind of balls up and fires higher? And it could be at any point. I'm just keep looking and looking and looking for these contraction points. Here's AG kind of backed out. And guys, I'm trying to see where this comes through. I mean, we're right there, kind of at support. I mean, is this thing are we just gonna head lower here? I'm just looking here. Looks like we got some support down here. Franco-Nevada's obviously pulling back. I'd wait for some buyers to step in first. Same with wheat and precious metals. Wait for buyers to step in first. Teuton Resources, a little bit of a sell-off. We got a lot of support down here. We'll see if it holds. Sandstorm Gold. I mean, the way this thing clustered up and was ready to move, I'm surprised this went lower. Very surprised. But we are still in a downtrend. So I'd hold on. Wait for a turn. AAG FF looks good. I mean, we're contracting. The buyers equal the sellers right here. This is a low-risk entry point if silver can get its butt moving higher. But right now, I'm in a holding pattern. And I mean, 5 years from now, we're going higher. Like, I am very sure of it. Between now and a year from now, that's the point. It's going to be very funky. We had things happen, and there's like about an 18-month delay. It's about a year, 1.75 years delayed is roughly what this moves behind oil. And oil had a bunch of problems in 2020. They went negative. And I don't know how it's going to be reflected in the gold price, because that is a deflationary type move. But we got this synthetic inflationary push from the banks and from Federal Reserve. And that's kind of holding us up until I think the expansionary phase comes. So it's a very weird scenario. We saw this scenario in 2009. It pushed gold higher, even though it was a deflationary crash in housing. So I do think that, I mean, it's just a matter of time before gold starts heating up here, I think. I think it's delayed a little bit behind oil. If oil starts to rocket higher, which it has been, it's been very strong, I think we've got a year behind that where oil and the price of oil filters through all of these products and increases the CPI. So right now, if you were to look at producer price index, it is higher than CPI. It's going to filter through. Now it's just a matter of waiting. Would I buy a lot of these? I would, because they're down. These are where the value is. The value is in gold and silver, and it's probably more value here than what most people realize. What's getting most people is that they're impatient. Patience is a virtue in investing. And if you want to buy cheap, I mean, we've got all these things here and people are selling them because they don't want them because they're going down still. And I know that people want to chase price. They want their accounts to go up now. But what I do is I buy cheap assets and then I hold on. I'm ultra patient. And if you're going to make a lot of money, you have to buy it when it's cheap. And it's going to feel like it's wrong. And I'm not telling you guys to go out there and go buy all this stuff. That's not what my goal is. My goal here is to tell you that you're going to buy stuff when everyone else doesn't want it. You have to do opposite of what your emotions and feelings are telling you to do. And, I face those same struggles that everyone else does. They're frustrated. They want gold and silver to move higher. They've been in it. And I'll do a video clip tomorrow. Subscribe to the channel, look for the video. I'm going to post it out there. And it's going to be real estate housing starts, which is residential single family home housing starts, oil, and gold. And I'm gonna chart them out. I'm gonna show you what it looks like, and you guys can get a better picture. Because I keep saying that this is just delayed behind it a little bit. And I can kind of tell you roughly what that delay is. I was playing with a bunch of numbers and what the numbers are. Maybe that doesn't delay it this time, but that's what the numbers are for last bull market. And we can use that. I think an inflationary avalanche is coming at some point, and I think it's going to be sustained and structural because of the demographics of the millennials buying new homes. And you can look at the housing market, the residential real estate market. I'll go over that information on the channel. And when we have a strong real estate market, we're going to have strong inflation from new houses being built. That is the thesis of the channel. And if you disagree with the thesis, I probably would go to another channel. If you agree with the thesis, we're going to be positioned for it. And it could be life-changing, life-altering investments in these because of the valuations in commodities and how low they are. And this is the conditions that they swap in terms of valuation. So if you guys like this content, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.